Risk Management, Optimal Strategies for Achieving Our Goals by Alhaji Ibrahim. Risk is an inherent part of daily life, woven into the fabric of our routines and decisions. Understanding and managing these risks is crucial for achieving our goal. This perspective was articulated by Alhaji Nura Miko Ibrahim, Deputy Controller General of Revenue in Papa, Lagos, during the Chartered Institute of Loans and Risk Management of Nigeria's 15th Annual Risk Professionals International Conference 2025, held at the Nicon Luxury Hotel in Abuja. Alhaji Ibrahim emphasized that risk permeates every aspect of life, financial, societal, and economic. He noted that financial risk in particular can have profound implications for individuals' futures. Many people take loans without properly assessing their options, which often leads to financial embarrassment. He urged Nigerians to live within their means to reduce such risks.
You need to establish and identify the risk itself in respect to the loan. What are the issues that you need to address? What are the issues you need to identify while collecting loans? How do you manage it? How do you mitigate it so that you will not fall into the trap? And by establishing a register to that effect. Well, I will advise them to always live within their means. Planning is key. Whatever you do, you plan according to your salary. If you budget and spend above your salary, definitely it's a bigger risk here. You will fall in trap. So you should always assess, analyze before you go for any risk. In the risk management institute, I've been supporting the organization. We are spreading the word by telling people the importance of the risk management on everything you do in your daily aspects, like there's risk. How do you mitigate it? I know this risk can be positive risk and it can be a negative risk. When you need to identify those risks to mitigate any future occurrence or proper planning. Always weigh your risk.
Dr. Cliff Ubeide recommended that the federal government adopt the conference communique as a working document for effective risk management.
With risk, the risk that we are facing in the country currently should also be considered in a situation of risk management. So we hope that the lectures that we receive today will be impactful. We will begin to apply them in our day-to-day activities. There should be discipline first in the area of finances. Before you go to collect loan, you should be well prepared about the conditions of the loan and live by it. It's all about being disciplined. Once we are, we can get things done.
Chief Barrister Waneka Walla advised loan service providers to thoroughly understand the financial capacity of their borrowers to minimize potential losses.
Well, it's minute, with the fact that I attended this conference. In fact, the keynote speaker gave us all we needed to do about risk management. All we do and in all our endeavors. And during the course of the conference, a lot of issues came up on this. Reduce risks, how to prevent it, and the rest of them. So my advice to everyone that wants to assess loan or whoever wants to give people loan is to do a preventive measure of it. You have to also understand the capacity of the person that you are loaning whoever it is to. And you also have to ensure that the person has the capacity to pay back, so you don't stand at risk of losing whatever it is you have loaned out. Those are the things we have really gotten clearly here, well substantiated. My advice, you should ensure that the person insures that loan before collecting it.
Dr. John Mandilas Bob Manuel highlighted the importance of identifying both credit and operational risks associated with loans. He stressed the need for borrowers and lenders to understand these risks and manage them effectively before engaging in any transaction.
There are quite a lot of risk when it comes to loan. quite a lot depending on your perspective. There are quite a lot. There is credit risk, there's operational risk, there's currency risk, there is market risk. There are quite a lot. So it depends on the product. Assuming you give someone a loan for agric loan, there is gestation period, the risk of gestation, correct? Assuming you give a loan again to a school, it is timely. School fees are paid quarterly. You do not expect the loan to run on monthly basis, but you take your repayment on quarterly basis. So structuring a loan is very important. The structuring of loan is very, very important. But for me, what is more key is monitoring in the credit process. And monitoring is post disbursement. There is pre and there is post. Post disbursement is more critical because monitoring is all it takes to ensure that the money comes back to the lender. That's the most critical part. That's where the risk, in fact, lies. Nobody can say, I will 100% do monitoring. And part of monitoring has to do with early warning signs. Are those loans or the facility, is it running in consonance with the conditions stipulated on the offer letter? Those are the things. So again, the lender may not have adequate staffing to be able to do all of this, because you need to monitor your clients maybe daily, maybe weekly. And again, how would you feel that you come to monitor because you've given me loan and you come to monitor me on daily basis? Tell me how you will feel. So these are some of the dangers in credit. Manage it. That's why we have AI now. That's why we have early warning signs. Those early warning signs should be adhered to. Early warning signs. What do I mean by that? Assuming you give a loan to a borrower and it's supposed to run through a particular condition, there is what we call transaction dynamics. You give an overdraft to a customer and it is not operating based on the dynamics, there is an early warning signs. Assuming the customer is supposed to pay on a particular date and then funds doesn't come into the account on that particular day, what happens? He fails the first time, fails the second time. Those are early warning signs. You'll be able. That's why we said monitoring is very key, and the way you can manage it is to ensure that wherever you're going. That's why in the 5 C's of credit, character is number one. Once you get the character, you can go ahead. Once the character falls within your profile,
Okay, so
that for me, it's very critical. For every lender, character is key. Character is key. Then for the borrower, integrity. Once you can keep to your integrity, you don't even need collateral. If you're
Dr. Saidu Buba echoed this point, urging both lenders and borrowers to be fully aware of the risks involved in loan agreements and to manage them prudently.
Well, you see, one of the basic issues in loan is something that you'll be given. We expect you to give out of the loan you are collecting, not only the repayment. Not only the repayment. We expect that when you collect this one, you go and invest. Investment so that you get interest out of what you are doing. At the end, you will now serve as an employer. Instead of maybe you coming and say that, okay, you have not paid your loan, but you have default. So we are now emphasizing this. If you want to go for a loan, have a visibility of what you are going to do. Is it a small scale business? Is it a large small business you have that you want to make it to be large? Then you go into loan.
because loan has interest on it actually, whether at each level, at each certain percent or rate. So the possibility of you collecting that loan, is it in a small or high amount? Know how you are going to now multiply this loan so that at the end of the day, the payment is not going to be a problem to you. Nigerian, actually, if I may say, stay away from loan actually. If you don't have the mind of repayment, do other things. When you get to a stage where you must collect loan, then you collect loan. That's my message.
Salahuddin Dalhatu, a risk officer with WFP Somalia, noted that operational risk is best managed through comprehensive enterprise risk frameworks.
Well, operational risk is best managed through the enterprise risk management model. Now, this is a model that helps you to manage your strategic, your operational, your fiduciary risks, and also financial risks. So if you follow this model, you are able to properly manage a risk, whether it is negative or positive, and how it impacts on the objective you are trying to achieve. Advice is risk management is in everything that we do. In our daily lives, we navigate risk management, and also in our professional life, we navigate risk management. The best effective way to navigate risk management is to be proactive and plan for risks. Plan your risks effectively, do your assessments, know what measures you will take to mitigate your risks, and then continuously monitor them. It is an iterative process that happens over and over again, and so we never stop managing risks, and we would never also totally eliminate risks.
Hawa Yakubu, country manager of a trade finance company and consultant for Islamic banks, drew attention to a troubling trend. Some individuals intentionally take loans with no intentions of repayment, expecting them to be written off. She warned that such behavior poses significant risk to financial institutions and the wider economy.
Behind the Almighty God is all about challenges. Granting loan has to do with taking risk, and recovering the loan is the major concern, because there are some individuals that will come to take this loan and later fail to pay back the loan, starting from performing to the extent the loan will go into substandard up to non-performing. So in giving loan, we need to check into the capability, check into the character, check into the constraint to see if this particular person coming to take this loan fits to take it, as well as the loan can be recovered without any challenge or going extra mile and recovering the loan. There are some people that will take loan and pay back before a given time, while there are some people who will take loan to the extent expecting the loan to be written off, which is not possible.
Dr. Chime Perret, a strategy consultant, emphasized the importance of adhering to the rules and regulations of any institution one engages with, as this ensures compliance and reduces risk exposure.
I think the biggest risk is default, and I think a number of organizations, particularly banks and financial institutions, need to ensure that they comply with regulations of their industry, whether you are a bank, whether you are an asset management company, or whether you offer loans as a microfinance bank. You want to comply with the regulations made in place for allowing people access loans. So I think the greatest things I would say is, I think the good thing is that the federal government has created everything called credit card. And I think when it's fully operationalized, I think Nigerians will have access to credit facility on better terms, and I believe with longer repayment terms. So I think that's my advice.
Alhaji Aliyu Bello remarked that life itself is fundamentally about risk, and individuals must understand the implications of the risk associated with their businesses or jobs.
Life is generally about risk. One has to know the implication of any risk of an event that may happen in the process of his conduct of his work, activities, business, or whatever. one has to take into consideration and know how to mitigate or avoid any potential risk that may hinder progress of whatever you are trying to achieve. All those fintech doesn't have the correct KYC of the prospective applicants. If you don't know the correct address, anything can happen. And in those things, there is no guarantee. So if you loan somebody and he changes his particulars, there is no way you can even recover, and there is no way you can lay your hand and say, this is what happened to me, or this is what happened between me and so person, so I want to recover my loan. Even if you go to the law enforcement agencies, they may not necessarily track you, because somebody who is fraudulent can even obtain a SIM card with another person's name and address, and after using it, they destroy the SIM card, so there is no way you can trust them. They just have to be careful and always have the risk management at the back of their mind. In whatever they want to do, they have to consider risks that may emerge or that may come. And between time to time, you have to do your risk analysis, because the risk in itself is dynamic. If you try to block one loophole here, people will now explore another way of beating a system.
Mutuand Yusuf Akinlabi, principal consultant at Elevate Insight Partners, encouraged everyone to conduct thorough due diligence before entering any business venture and to consult their banks to safeguard their finances.
We're in the digital age, and just like you said, risk surrounds us. It is important that for every individual, whatever you venture into, you carry out due diligence. You are planning to establish a relationship with someone, buyer-seller relationship. You have to make sure you do your due diligence on your buyer or your seller, whichever category you fall into. Now, there are ways where you can guarantee yourselves. You want to go through your banks to protect your finances, where you can raise LCs, APGs on your transactions, so that you're protecting yourself from the initial phase of your transaction up until the end. For every business entrepreneurs, and for everyone carrying out any form of transaction, these recommendations are relevant to everyone. Make sure you carry out your due diligence. Do not venture into any transaction that would not be well protected. You need banks, financial institutions, you need advisories, consultants to put you through on what you need to do. Related bodies like the ICC, where you can get general information, country to country advice on whatever you need.
In conclusion, effective risk management is not just a necessity, but a strategic imperative for achieving personal and collective goals. By understanding and addressing the various risks we encounter, we can pave the way for a more secure and prosperous future.